Hello everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predict gold prices. So in my last video I was still bullish on gold, but the Gold Forecaster Index was dropping, so the growth will be slower. And what did gold do? It actually went down a bit. So I was right to be cautious. Let's see what the status is for this month. So the gold forecaster index, we know this is an index based on leading indicators. So you need to follow this. It's very important. And the red line is pointing down again for the new data point. It's still positive, but you can see that it's headed negative. So I expect that gold is going to have a little bit of problems for this month and next month. So don't expect gold to rise to above 2000. It's not going to happen. It's still positive, but yeah, we need to monitor this. Maybe next month it will go negative. I don't know. No, it's not all bad. We still have the Taylor roll rate, which is still above 10%. So this is positive. So the Fed is not hiking rates fast enough. So this is going to keep on having an effect on the inflation rate, which is still very high. Okay, so that will push up gold. Misery index as well. We can see that the initial jobless claims were rising. So unemployment rate is also going to rise. We still have some inflation left. So this chart is positive for gold. We don't have new numbers on output yet. Let's take a quick look at Chile and Peru production. Copper production is stable, and in Peru it's down. So this could be positive for silver. Gold demand still very weak on the GLD. So institutionals are not buying yet. Same here in COMEX numbers. I do see a bottom in the gold deliveries. So this is starting to bottom out. So it could be a positive sign. On the LBMA side, this is positive for silver because the LBMA silver holdings are going down. And typically when that happens, silver will rise. We haven't seen it yet, but it could come very soon. And why? Because we have a huge increase in China silver demand. I have not seen this yet. So this is the second largest SGE delivery for silver from China. So this is pretty bullish for silver, okay? It was very low and now silver demand has actually started to increase. For gold, it's also in an uptrend. So the blue line is up. This is very bullish for silver. However, we still see that the SLV is still dropping. So the institutionals are not buying silver yet. Maybe they are late. There's a delay. There's also no interest in PSLV. It went up here, but now it's still flat. So no interest in PSLV, no interest in SLV yet. But the Chinese are buying. So I would follow the Chinese. Here as well, the Shanghai Futures Exchange silver demand has also bottomed out. So the Chinese are buying. And you can see that inventories typically stay around this level. So this could be the bottom. So that's why I bought Santa Cruz silver. Want to speculate on this. Also on the COMEX, registered silver is very low. It's almost as the same as in this period where registered went down and eligible went up, and this was the bottom in silver. Okay, and then silver went up. Could happen again here. We are very close. Some shenanigans at JP Morgan, registered up and down. US mint sales is a bit more negative. We don't see any US mint silver sales. It's very low, the same for gold. Premiums. Premiums are very high still. So that could be a sign of a bottom. Typically, high premiums are bottoms in the silver price. Same for junk silver, also very high premiums. So this could be a bottom. Shanghai silver premiums are still a bit lower. So we had higher premiums in 2015 to 20. So I want to see these higher. So it's not 100% bullish for silver yet, but it's rising. UpMax gold premiums are high, so that's good. Here the PSLV premiums are not that good yet. It's still negative. I can show you that. Still negative, so there is no interest in silver from the retailers. Gold COT report and silver COT report is very good. So a lot of shorts have gone for both gold and silver. And you can see that here as well. Historically, this is a time to buy gold, and historically also for silver. This is typically the top. So this could be a bottom. Same here for the swaps, never been this high, and here as well. So when you look at the probabilities, I think the bottom is in. Very low risk to buy some gold and silver at this level. Lease rates weren't that good. So this is still going down, and this is also going down. So that's not a good sign. Swiss franc is, yeah, it's lower because they are part of the Eurozone, which has problems, and I will talk about that later. Tips are in an uptrend, so that's because the yields have been dropping lately. So that has pushed gold a bit up. Also the tips. Real yields still in an uptrend. So this is the negative consumer price minus the 10-year yields. So that's the opposite of the real yields. It's going up and gold should be rising as well. Seasonality, we are in August. This is the perfect time to buy. For silver, it's also a very good time to buy. This is typically the bottom and will go up until April. So it's actually looking very good for precious metals. Here also a bottom in the miners. You can see that each time we have this bottom, the gold price also bottoms out. Here, 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 always a bottom. So this could also be a bottom. And the big picture, gold is still low compared to stocks when we look at currency in circulation. Let's take a look a bit about, talk about copper. Copper is actually, I think it's trying to bottom out. Real economic activity is rising. This is also very positive. Warehouse levels have started to go down, so that's positive for copper. Latest credit impulse chart says that we are in an uptrend in credit impulse, so that's positive for copper. Shanghai was not that good, it was flat. GDP forecast is, yeah, we already had a recession, but now in the next quarter, the third quarter, we are going to have 1% growth. Some numbers on copper. There will be more demand than supply. So should be very good for in the future, but in 2023, we will have some oversupply. Scrap copper premiums, very low. So that's almost at minus 1,000, right? So minus 1,000, very low, and I think this could be a temporary bottom in copper if this starts going back to zero. Seasonality is not good yet, but in September you can start buying copper as a speculative play. COT report is also very bullish copper. We went from short to long. Interesting as well, China is now starting to import copper again. This is the latest number. That's typically bullish for copper. Yardeni I will talk about later. And here we have the inflation numbers. You can see that the trend is still upwards. So we are still in inflationary period and inflation is starting to go up again. So this is the break-even inflation rate. It's rising. So that's good for gold and copper. Also, rents are still rising. So I expect CPI to keep on going up. Okay. Then let's take a look at the yield curve because this is the only thing that worries me. The yield curve is now back negative, inverted. So each time that happens, we will see a recession. But yeah, we got a recession. We had 2 quarters of negative GDP. So maybe it's already over. I don't know. But this is something to watch. Money supply is flat. That's not a good sign. I want to see money supply go up for gold. This is also worrying. Let's see the loans. Loans are rising very fast, so that's a good sign. We want loans to rise. Here we have the central bank balance sheets, and they are dropping like crazy, especially from the ECB and the Bank of Japan. So this is in dollars. You always need to look at this in function of dollars. And this is very deflationary. USA is still flat, so the central bank is not really doing QT yet. It's still very flat. But yes, this is not positive for gold. For gold, we need to have more increases in the central bank balance sheets. So we have positive points and also negative points for gold. Let's take a look at credit spreads. Yeah, this has been going down, which is bad for stocks. And here it's also going down. So GDP will be very weak, which is actually good for gold. Now the trade deficits, the latest data point is actually positive. Services are flat and goods trade deficit has shrunk a bit. So this is not that positive for gold. For gold, we need to have high trade deficits. And actually, USA is doing very well right now. And it's probably going to improve more because I see the price index for air freights is going higher. So that means that the trade balance will probably improve more and more in the coming months, which is good for the dollar and bad for gold. Yeah, import prices are up a lot. So the gap is still high and it's increasing again. That's interesting. The trend is up, so that's inflationary. We're still in inflation. We still have a gap, we still have the deficit, but it could narrow, okay? So it is narrowing. Then let's have a quick look at the Fed funds rate. Fed funds rate is still going to go up in the coming months, but you can see that it's now flattening. That's interesting. So it rose very fast here, but now it seems to have topped out at 3%. So probably one more rate hike and then very small rate hikes. So we are at a point where the Fed is going to pivot, and that will be good for gold. So watch this chart, very important. Capacity utilization, let's see what happens here, has not gone up. So this is less inflationary, still at a very high level, at 80%. So this is the Fed pivot. I think that rates will go to around 3%, and then the Fed will start pivoting and lowering rates again. Now on to some other things. This was a very interesting chart about the grade of copper, which is now about 0.5%. So I think we're still in a copper bull market, especially when these grades are so low. But yeah, we need to wait until the recession is over. Probably next year would be a good buy. This is also interesting. Yardeni has increased the stock market forecasts. So it was like this, 4590, and now it has gone up to 4845. So yeah, the outlook is now very positive for stocks, probably a 10% increase by next year. So yeah, I think it's a good time to buy stocks and not stay in cash. And that's what's happening now. Increase in outlook. The same is correct for commodities. I wrote an article here. There are 5 charts that are very important to understand where we are in the commodity bull market. So the first one was the Taylor rule rates, which is still at a very high level compared to 2008. So I don't think that we will crash like in 2008. I think commodities will keep on rising. There's also this difference. 2008 we had rising inventories. Here we have declining inventories. So we are in a very different period right now. Here commodities crashed, here they will go up. Next chart, 2008, we had no deposits, okay? There was no liquidity. Now we are in the opposite scenario. We have huge amounts of liquidity in households and non-profit organizations. So that's also a difference. Another difference is this time it's sticky inflation. 2008, inflation went down. Now we are headed upwards to a record level. So this inflation is not going to come down soon. That's sticky. And last but not least, in 2008, we had a lot of capex in the commodity sector. So that's the blue line. Today, we have no capex in the commodity sector. So this is where we buy commodities. Here we sell the commodities. Okay. Always buy when the capex is low and headed higher. So a very different period today compared to 2008. Next chart. I'm thinking that the stock market has bottomed, at least a temporary bottom, because of all this fund positioning. Each time this happens, we have a bottom. So it could have a bounce, and we need to keep on watching this chart. If it bounces too fast, then probably we are headed down again. But we should have a temporary bottom. Also interesting chart is the chart of premiums. So this is the silver premium chart of APMEX, and this is the physical silver, and this is the spot silver. So you can see that the gap has increased, and when you look at this chart, let's take the average. It should be around 25 to 30. So I think that silver could go back above 20 to maybe 25. That's a 20% increase. You can leverage up by, for example, buying Santa Cruz silver. So this is also interesting. The US went all in the bond buying somewhere in 2020, and then the dollar went down. Now we have the ECB that is doing no limits bond buying, and I expect that the euro will now go down. So that's my expectation. I wouldn't stay in the euro at this point. It's too dangerous. This chart we already talked about. That was a credit impulse. Natural gas now. So natural gas flows to Europe has been going down. And this is one of the theories that I think the euro is going down. We do not have enough natural gas flow anymore to Europe. So gas prices are going to go higher. Electricity prices are going to go higher. And this will have implications on GDP in Europe and also the deficits. Europe is going to have a lot of deficits, which will be bad for the euro. So Nord Stream is currently at 20% of capacity, which is very low. Euro crash has not even started yet. So this is the speculative positioning. It's still at 0. So if this goes short, then the euro is going to crash a lot, probably even to 0.6. I expect this to happen probably by next year Q1 when everything is going to hit. And it's starting to hit because this is Nord Stream, 100% went to 40%, and now it's at 20% capacity. So not a good outlook for the Eurozone. Worst is yet to come. Balance of trade is now very negative, very bad for the euro, and a gas shock will come in Q1 of next year. Okay, so the worst is yet to come. So let's conclude with some charts from Charles Nenner on commodities. So which commodities should we buy? First chart, general commodity chart is going to go up. And then in 2023, it goes down. Base metals have crashed a bit, and now they are probably going to rise a bit until August, and then it will crash next year. So probably the bottom is almost in the base metals, and it should rise until next year. Wheat should have bottomed out right now because we are here, and it should rise until the end of the year. Gold is probably here right now. So in October, we should start rising again. It will not rise very much, like I said, but it will be inching up. Silver is going to stay flat, apparently, but in an uptrend. Oil is going to go down, apparently. And natural gas is going to have a bottom in October. So we are now in a downtrend again. And in October, we should buy the natural gas. Then it will rise until next year. So this was the update. Basically for gold, I think the bottom is in, but don't expect huge rises to 2000. It will be a slow rise, and we need to watch the gold forecast index. Okay. And China has started buying silver. So I think it's a good speculation to get in some silver miners right now. And I'll see you in the next video. Bye.